Here we have the 15-minute price chart for AMC Entertainment Holdings Incorporated, stock ticker AMC. Here we can see that the stock has made a bit of a bounce here after falling to recent lows, coming in right around 440, 441 roughly. You can see here that most of the top side have retraced most of that prior price move, but we will need to take a better assessment here to figure out exactly where we currently stand at the moment. Here we can see that this movement to the top side has managed to retrace more than 61.8% of the prior declines. So this does put the stock in fairly strong territory on a shorter term basis. If we are looking at the exponential moving average cluster activity, however, we are starting to see a bit of resistance that has been forming right around this 510 level. We have seen some short-term breaks above this, but this has not yet been enough to force prices above the 78.6% Fibonacci zone. That would be required in order for us to start to target a full retracement of this prior decline. So if we're really trying to measure out what happened here, we do have to first look at this movement that occurred into this 545 zone, and then we can draw this extension here to the ultimate declines, which came in at roughly 455. Moving out to the 30-minute price chart, we can see that the indicator reading here is showing a bearish momentum condition. This is going to put some pressure on the stock here near term because we have started to see some rallies. But if the overall share price momentum is focused on the negative direction, it's going to be hard for the stock to continue gaining traction. In order for us to reverse this overall bias here, we would need to see a break above this 523 zone. This does mark the 78.6% retracement of this decline from roughly 445 all the way down to 440. So this would be important in terms of breaking through resistance areas that will then ultimately target a full retracement of this bearish move back toward this 545 level. If we are able to break above here, this would be a fairly bullish event because then once again, we would be targeting this prior triple top resistance zone that I have mentioned in prior videos. As we can see here, this area has been tested on 3 separate occasions. And if we do see a fourth test here, there is greater scope then for that level to start to break to the top side. However, there's still a fair bit of room here and a fair bit of wood to chop, so to speak, in order for us to move back into this area. Finally, I do think it's a good point here to kind of pull out a bit and try to look at the broader perspective because at this stage, it is quite clear that the stock really is flatlining at these low levels. As we can see here, there is really a sideways trading range that has developed well below the $15 mark. And this is a sharp contrast from what we have seen previously. Even if we compare this activity to what has already occurred with the short squeeze activity in GameStop, we can see some very stark and dramatic differences here. Specifically, we can see that this prior spike high, which would have developed during the midpoint of 2021, has really been all that we have seen in this stock. And then from there, we've seen a steady measure of declines here in what has followed. Even with GameStop, we did see a fairly substantial price rise in the following direction after the sort of resurgence or revival. Later on, we did see a revival in GameStop when the meme stock activity started to grow again in excitement. And when that occurred, we did see a fairly strong spike in the positive direction. However, this price chart should make it clear, and this is a weekly price chart. This price chart should make it clear that the same type of action has not occurred with AMC. All that we've really seen here is a steady series of lower declines, followed by a series of sideways trading activity. And then even within that trading activity, the overall measure of performance has been quite lower. For these reasons, the prospects of a strong upside price surge do not seem to be as equal or possible in AMC as they might seem when we're looking at a GameStop chart. There simply is no revival here higher. There's no upside activity that's showing strong potential for an upward surge in share prices. For these reasons, it does make sense for AMC traders to start to look for an exit strategy. This is something that I've discussed in prior videos, but when we're not seeing anything that resembles a secondary upward surge in price movements, the scope for a potential short squeeze is much less when we're comparing the price action here with that of GameStop. To better visualize this, I think that it's a good idea to look at the GameStop chart itself. This is a weekly chart of the GameStop Corporation stock chart, GME. Here we can see that there is a very clear difference between the upsurge and secondary activity that was seen in GameStop relative to what was seen in AMC. There were positives that were associated with AMC stock trades in that the potential for downside in that stock was much lower than the potential for downside with GameStop. However, at the same time, it has to be understood that the potential for upside was limited as well. As we can see here in this price chart, there is a very stark difference between the secondary rally that occurred roughly the middle of 2024. Let's call this May 20th. Of course, this is the action that followed the prior upward surge and short squeeze activity that occurred during the early periods of 2021. Overall, what this tells us is that the potential for short squeeze upward surging price volume has become much reduced and is possibly impossible at this point. Given the fact that the overall size of the rally in GameStop has been much lower than what preceded it, all that we can surmise when looking at this chart is the fact that the possibility here for a tremendous upward surge has diminished and that this is likely to continue going forward. So we can continue to trade AMC stock from the shorter term perspective, but it is important to keep these longer term phases within the overall price action in the back of your mind. If we forget these broader trends, it might become more difficult to understand where the stock is currently trading and how far it's likely to travel higher going forward. As things currently stand, the price levels that I'm watching come in at roughly 545 to the top side, and then to the downside, we can see that support is now formed at 440. If we do see a break of this 545 level, the next upside target becomes the 575 resistance that I have mentioned in several prior videos. If we do see a test here, it would be the fourth time that this level has been tested. When we do see a price resistance level that's tested 4 times, the chances that that price level is going to hold diminish over time. The more times it's tested, the more likely it is that this level is going to break. So if we do see an upside test here, yes, we could absolutely see an upside break of 575. Overall, however, it's important to keep the broader context in mind because even an upside break here does not mean that there's a price surge that's occurring. I don't see anything wrong with day trading this stock. I do think that the downside here is relatively limited, but I also think that the upside here is limited as well. So here's the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.